Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Tuesday. I hope it finds you well out there, wherever you may be listening on the radio, the podcast. I mean, so many ways now to listen to the Patriot Radio News Hour. YouTube, Rumble. I mean, I can't even listen to them. I don't even know. We're just about everywhere out there. We thank you all for your support. 800-951-0592. That is our toll-free number. AllAmericanGold.com is the website. And we're at that period now. The Boston Celtics won the NBA championship last night. I know it never really made sense. It's the middle of June. We're still out there playing basketball, but, you know, it's all about TV, I guess. But now it's baseball only. It's like football hasn't gotten up yet. College football hasn't started, right? All you got now is baseball and maybe a little bit of golf mixed in. Jason, it's definitely the dog days of summer.
Well, there's still a little bit of the Stanley Cup. I think that might finish tonight. You know,
that's still going. Okay. See,
there's a little bit of hockey. You're in the desert, but hockey is really popular down there.
I guess that's even worse. It's the middle of June and we're still playing hockey. So a little bit of hockey. I guess that's not over. I thought that was over. Maybe not. I guess the Oilers must have won to keep them. To keep them alive. But, yeah, there's not a lot going on, right? You know, you're like, man, it's 1,000 degrees outside. There's nothing on TV, right? You're just bored. You know, lately, I used to be one of those, bored eaters, you know. I'm just bored. I'm not even hungry. I'm just bored. Probably for like the last week and a half, when I get to that point, I'm like, you know what, the heck with it. I'm just going to bed. I mean, I've been in my bed before 8 o'clock like 3 times in the last week and a half just because I don't know what else to do, right? There's nothing good on TV. It doesn't even matter how many cable channels you have or Netflix or any of that other streaming stuff. There's nothing worth watching. There's not even a movie. Remember you'd have the summer blockbusters? Where are they? I mean, there's literally, it is so funny with all of the technology and all of this stuff. There's nothing to do.
You got to be really smart. You got to outsmart yourself. You have to ask the right questions. So when you're on some sort of thing like YouTube or looking at videos, if you just look at the choices in front of you, you will get bored because they're going to give you a whole lot of stuff that isn't going to interest you. But if you ask questions, actually search something that might be interesting, you'll find good stuff. But they made it really tricky. You have to, if you're on Netflix, you have to look. You have to look to find one or two good movies there.
I want to say that my wife and I, we tried the looking thing. You can look. It can be like an hour of looking, right? And then,
yes.
You start asking your friends, oh, what do you want? Give us some recommendations and blah, blah, blah. It's a great show. We turn it on, and about 10 minutes in, my wife just goes to me, I'm done with this. I'm like, oh, thank God.
Yeah.
Right?
Yep.
It's horrible, right? And you just turn it off. Yeah, that's where I'm at right now. This is my life right now.
Well, if we're going to eat while we're going to watch something while we eat, usually, the person finishing the food is finishing the food. The other person has to get that 10 minutes to search. And then everybody meets at the right time.
Right.
Here's the other thing. What's the funny thing? Here's another thing. Netflix is telling me how serious and how tight money's getting. We don't want to talk about finances. I have a good buddy of mine several years ago. I think we had just turned our TV on and we were setting things up. He was like, here, let me give you one of my devices. And he clicks me onto his Netflix. I don't know how many years it's been, So every once in a while I flip him a few bucks since he's paying for the Netflix. But I got a message that popped on my TV screen over the weekend. Joe said, as of July 24th, this device will no longer be receiving Netflix. Please go to blah-blah-blah.com and set this device up. I was like, yeah, Netflix needs a few more dollars, Joe. Maybe the subscription levels aren't high enough.
You have the membership, because my kids don't live at home, so but they would use our Netflix. Oh no, you can't do that now, right? This Netflix account is good for this household only, right? You go to another place, you gotta pay. I don't even know what it costs, so I can't. $10, $12, $15, whatever it is. But yes, I've even my wife said, you know what? I'm gonna start canceling some of this stuff because it's not worth watching. I just man. It's going to be a long summer, and it's already like way hotter than it should be already. So but any event, that's been my life. I get to work way too early now because I'm going to bed earlier, right? I'm just up, and I just got to go to work. I'm sitting here and get ready for the show, do all that stuff, and then I just kind of sit there, stare at the wall because I'm like the only one here. Brittany gets in, about 7:15-ish or so, but for a good couple of hours, I'm just kind of staring at the wall in here. But nonetheless, the show must go on, and man, we had retail sales out today, consumer confidence was out today, a few other reports were out today, and I'll say this. I'm going to go with this was a good report if you're hoping for rate cuts as far as the consumer goes. Maybe not a great report if you're actually a business that needs to sell things to consumers. All of that and much more coming up next. Stay with us. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Tuesday. A quick look in at the markets. Pretty flat here. The Dow is up 1 point. The S&P, it's up a fraction of a point. The NASDAQ is down 50. The 10-year note down to 4.24 on the poor retail sales. We'll get to that in a minute. Crude oil is up another $1. It's like the third day in a row here, going back to last week. $81 in change on crude oil. Gold's higher today, 23.25 right now. Silver higher as well. Well, I guess it depends on where you look at silver, but in the paper contracts, silver's higher. But right now, just over $29.30. And Jason, we called this the year of chaos for a reason because we've kind of felt like this was going to be one of these finishing off the bubble here. And we've got exactly that, right? We've got Wall Street at or near all-time highs, which, that's what you got to have in these bubble areas. We got all these areas of concern and everybody waiting, when's the market going to break? How bad is the landing going to be? But get the most diversified that you've ever been. I mean, that's just common sense, right? If you think about it, think about since, 2000, right? First we had the dot-com bubble, right? Everyone remembers that. That didn't feel too good, right? Everybody kind of licked their wounds because anything .com was the great big, thing that was going on. And then we had the financial crisis, right? Now it's even worse. Right? We know, right? I mean, how many people do we know lost their home? How many of you out there, maybe you lost your home, right? It was a tough time. Your 401ks got destroyed and now we're getting ready for it all again. And the pattern is, some of you have been around, so go back to like the 87 crash, right? Each one of these crashes gets worse. Why? Because it's all built on debt, and the more debt you have, right, the worse it gets. I mean, it's actually really simple. Be a lot smarter. Be more diversified this time. What are you going to miss? Well, you're going to miss another, I don't know, 3, 4, 5%. Right? Is that worth the risk when it all comes crashing down? It's not. Get that gold and silver put away. Check out, if you got $50,000 or more, check out our friends at Y Refi. You can get up to 10.25% fixed rate of return, not correlated to Wall Street. You can lock that rate in for 5 years. Right? Hey, whatever I put in there, I'm going to get 10.25%. Every single year, year after year, I can use it as income. I can turn my income on. I can turn it off. You do whatever you want. Well, what if I need my money back? They don't attack your principal. You get it all back. And like I said, the biggest part of all of this, not correlated to the stock market. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-Y-REFI-24. Now, retail sales came out. Now, this is a May number. They were really expecting a pretty good number. Why? Because, March and April were crappy. And they really thought because, Easter kind of fell weird, so April was bad because Easter ended up being the last day of March, and we're going to get a bounce back. And a matter of fact, they thought it was going to be up 0.3% month over month. But the reality was the whisper number was for a lot more. So they were actually thinking, hey, we're going to get 0.5% or more. Well, two things happened. Number one, they didn't get it. Retail sales, month over month, up 0.1%. The problem was, that's a miss already. But April, which was 0. So in April, there was no increase month over month in retail sales. That got revised down to actually negative 0.2%. So it made that 0.1 really not even that, right? Because if April had been unchanged, right, retail sales would have been negative in the month. The lowest year-over-year print. So guess what? Retail sales was only up 2.3% year-over-year. The Fed doesn't even have an inflation number that low. Man, they don't even have it. So real retail sales is actually negative for the month. When you take out autos, so I get that. So sometimes today we're taking out autos. It got worse. Down 0.1%. They were expecting a 0.2% increase. They didn't get it. Food service spending was also very weak. Gasoline, and that makes sense on gasoline, right? Gas got a little cheaper. But the control group, they don't use all the data for GDP, but they use this control group. Not very good either. So the control group for April and May, down 0.1%. So remember, this is the retail sales that they'll use in GDP. And like we said, real retail sales for the month of May, Jason, was actually a negative number because we just couldn't overcome inflation.
Well, it makes sense. From where I'm sitting and looking around, there's a lot. For the average guy, it seems like there's a lot less buying stuff, Joe. It just seems like it's really cooled off. It really has been cooling off slowly, like a snail's crawl since 2022, Joe. Last year was a slowdown, and now looking at 2024, it looks to be slower than 2023. So those numbers seem to me to be true. I mean, but what do I know? I'm just in Colorado. I got a small sampling of it. We kind of got a growing area going on here, but it doesn't seem like there's a lot of enthusiasm when it comes to consumers right now.
And this has, again, gotten people on high alert. How many corporate bankruptcies now are we going to see? Fisker, the electric vehicle maker, they're the latest. They filed for bankruptcy today. A big article out on allamericangold.com anticipating not only are we going to get a lot of commercial real estate, as we already knew, could be another big jump now in corporate bankruptcies. And then to top it off, the World Gold Council released their annual central bank reserve survey. So they had 70 central banks respond. Now, I don't know, they don't tell me what 70 they were, but that's a lot of them. That's all, the majority of the central banks out there, and blown away. This was an all-time record high because one of the questions they asked was, do you expect to increase your gold reserves over the next 12 months? Almost 30%, they said 29% of the respondents said yes, they anticipate adding to their central bank gold reserves over the next 12 months. Just to get, 30% of 70, that's over 20 central banks admitting that they're going to be adding to their gold reserves over the next 12 months.
Right, and gold had that nice spike earlier this year, right, Joe? We were watching it. It was going up, it seemed like $100 a week as it springboarded from just around 2,000 to tipping off just to 2,400. Now it's kind of gone sideways. When you're talking about central banks continuing to buy gold, because this has been going on for month after month after month, that's why we said in June we might see a spike. Well, it's not spiking in June, but it will spike again. And when it does, people that have been sitting around saying, I can't believe how many people, Joe, are saying, well, I think gold's too expensive. I'm going to wait for it to pull back. It's not. Central banks aren't waiting for it to pull back, are they, Joe? They were. They loved buying it the last couple of years when it would, each year, 2020, 2021, 2022, it might get to $2,000 once during the year, then come back to $1,850, $1,900. They were buying the whole time. They've been, and it's been, as it's been going up this year, well past 2,000. They haven't stopped buying it. They didn't stop buying it. Obviously, it's not too expensive. Central banks are continually adding.
And I'll tell you this, I'm a little surprised, especially with the timing of the survey, right? We're pretty close to all-time record. We're over $2,300 an ounce, and the amount of central bank, it broke a record, right? More central banks said that they're going to be buying at these levels than when they asked them a year ago, 2 years ago, 3 years ago, 4 years ago, 5 years ago, when gold was a lot lower. And here's what was amazing inside of this. 81% of the participants expected gold holdings to rise. Now, I want to know who the heck was the 19% that didn't. That's right. That's what I want to know. By the way, that was an all-time record. So whether or not their central bank was going to buy, right? Another question is, well, do you think more central banks are going to buy more gold this year or not? 81% said yes. And then when they talked about looking at the dollar's role, this is the part that's important for it, because I get it. Why do I care? Joe, why do I care about these central banks? I know you and Jason say you got to be your own central bank. But why do I care? And it's very simple. Because normally what had been in the past was these economies were holding dollars. Right? They were holding treasuries. Now, it could have been some euros, some yen, right? Some, maybe a British pound. I doubt it, but maybe some of them. But mostly it was dollars. And we talk about the size of our debt, how much debt we have to sell, how it grows every single year. And now all of a sudden, right, the thought was going to go, well, look at China's economy, right? It grows, and they'll just buy more dollars. Because, their economy's bigger, so they got to have more money set aside to buy stuff. That didn't happen. Matter of fact, inside of the survey, looking at the dollar's role as the world's reserve currency, 62% of respondents said they thought the dollar's share would diminish from where it is today to where it's going to be in 5 years. If you went back to this survey in 2022, only 40% thought the dollar's role would diminish. It's now up to 62%. 69% thought the yellow metal would constitute a larger portion 5 years from now than it does currently today. So think about this. 30% said, hey, we're gonna add this year. 70%, 69% said, hey, our gold holdings are going to be higher now or higher 5 years from now than they are today. So, Jason, it looks like maybe outside of the G7, everybody else is looking to add gold. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Tuesday, going over the CME's survey of central banks. And it's not good. But it's exactly what we've been saying, right? When Jason and I talk about putting gold and silver away, it's not, hey, we want you to put it away today and then dump it 3 months from now. This isn't a stock. This is the long term. Jason and I, it's savings. And while you save it, you get to enjoy the same purchasing power from when you saved it. Right? Anybody who bought gold from me in 2004, right? All as you did is, hey, guess what? If I bought $20,000 in 2004, right, and gold was $300, right, and now gold's right $2,300. Well, when I sell it, I could still buy the same stuff, right? I could buy a brand new car, a really nice brand new car in 2004 for $20,000. Well, I could still buy a nice brand new car today, right? I can still do it and probably have a few bucks left over. That's what gold does. That's the whole point of it all. And what these central bank surveys are telling us is they really don't have any plans to add any more dollars. When they asked them, in the next 5 years, are you going to hold more gold, the same amount of gold, less gold? You know what one didn't register? Less gold. Right? Some of them said, well, we're going to have the same. Yeah, we're going to have the same. And we can probably guess who those countries were. 70% of them said we're going to hold more gold. And then when they asked about the dollar, they all said the same thing. Yeah, we're going to hold less. We're going to hold less. How's this going to work? We need to sell more. A lot more. And they're saying we're going to hold less. It's interesting when we look at this. When we look at gold. Do you know central banks were net sellers of gold pretty much every year from 1982 to like 2007 till the financial crisis? Every year. See, that's when they thought they were real smart. Right? They thought they were real smart. We've got control of this. and everybody just buy dollars and everything's going to be fine. Since that time, central banks have bought gold every single year since the financial crisis. Why do you think that is? Because they know, hey, you don't have it. You don't have it. You don't have it. You don't got it. And when we start looking at mine supply, do you know that gold mine supply has been stagnant since 2003? And now it's really getting ready to decline. Right now they're maxing it out at $2,300 gold. They can spend more money and get less gold, right? And that's what they're doing. It's just, hey, we'll chew it up because it's still profitable. Silver mine supply, it peaked a little later. 2016 was the peak in silver. And of course, I've told you now, we are in a situation where we have supply deficits going on in both of these two metals, and every 1% drop in mine supply, you're looking at a 2 to 3% increase in the price. And Jason, you sit there, you get a mine supply down 5 or 10%, and you have a price explosion in these metals.
Yeah, and silver, even though it peaked later, has that industrial element. And as you're talking, I'm just trying to look. I mean, I know that there's 500 ounces in one Tomahawk missile, right, as things are blowing up in the world. I was just trying to figure out, I wonder how many ounces of silver is in one of those military drones. Those are the things that are getting blown up, right? How do you recover whatever silver is in a blown-up drone that falls into the ocean, right? So there's a usable element to silver. Of course, you got the green movement. Everyone's supposed to slap solar panels on their houses, right? So it's gonna drown the supply even more. I've watched video after video after video about supply shortages in silver, Joe, that just never ends. And I don't always believe what the wave of people are talking about, but it's kind of unceasing, right, Joe? How the supply of silver and gold is going to eventually, I think, feed the price levels going up dramatically once. I think certain individuals start to rush in late, and it's what a bank run is, right, Joe? We don't have old-fashioned bank runs, like we used to. It could happen again soon, but gold and silver is kind of like a bank run because it's the actual money. When people want actual money, when they're freaking out about what their paper assets might or might not do, suddenly there's a rush. And Joe, what does it take? 1% of Americans? 2% of Americans, and suddenly gold goes shooting upward.
Yeah, and this is something where even Bank of America, which came out and said, hey, gold's going to average, they raised their silver forecast to $35 in 2026. Now, that would be an average price, $35. You got gold or silver right now, $23 and change. But the thing that Bank of America said is, oh, by the way, we're giving you a caveat. It'll only be $35 as long as investment demand remains weak. And what they're talking about is silver ETFs and if like gold, silver eagles, right? Silver here at home, as far as like silver coins, silver bars, as long as that remains weak, then it's only going to average $35 in the next 18 months, right? So think about it. That's still a pretty good return, right? But Bank of America said, but if that changes, right, look out for the price of silver. So, and again, supply and demand. That's what this thing's all about at the end of the day. Too many dollars, not enough gold and silver for these central banks. Patriot Radio News Hour will be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Tuesday. And again, not surprised. I think the surprise probably today was retail sales, right? That was the surprise. We didn't get a big bounce back in retail sales. The control group of retail sales, which they use for GDP, so far, the first 2 months of the second quarter, negative 0.1%. I mean, that's where we are. And when you think about inflation, even their best readings are around 3%. That's a big fall, right? Because if there was no inflation and it was down a tenth, okay, it's down a tenth. But if there's 3% inflation and it's down a tenth, Jason, you're actually down over 3% in retail sales for the first 2 months of the third quarter. Right now, gold's at the highs of the day, up 11, $2,330. Big special today, $20 gold pieces, $2,450. That's, man, crazy. It's $120 over spot. This is great. This is what you want, right? When you're talking about when's the best time to buy, I think the best time to buy is when you're ready. That's always the best time. But you always want to be like, well, what do I do? I want to buy as close to spot as possible. That's always the goal, and that's what you're able to do here today, buying this close to spot. You know, you got gold near all-time record highs, and you heard the central banks. I didn't say it. They said it. 30% of them are going to be buying more gold this year. How about 5 years? 70%. What did they say about the dollar? Oh, yeah, we want to have less. Right? We want to have less. And look how fast it's changing. Just 2 years ago, only 40% of the central banks surveyed said they wanted to hold less dollars. Now it's 62% want to hold less dollars. Only 40% of central banks said they were going to buy gold. Now it's 70%. Be your own central bank. Add to your portfolios here. I don't even know. Does any bank right now even have gold below $2,450 this year? I don't think they do. I think the lowest bank I see, and that could be, there may be one or two. You know, maybe there's somebody out there at $2,500. But pretty much everybody's like $2,700 to $3,000, and based on what these central banks are saying, Jason, that looks to be awfully accurate.
And if they're proposing a number of that nature, then that's normally going to be the low number, especially if there's any kind of buying that's going to be going on from the people making these numbers. They don't want to buy it for $3,000, so they say $2,700. And 3,000 gold just seems very easy to get to, especially what we saw in March with gold this year, Joe. Because I remember how shocking, the guys who've been in gold longer than me saying that how sharply it rose earlier this year. And I think that's, you always get a warning before things really get crazy, right, Joe? There's always a warning. And if we see something really astounding happen in gold with the prices going up, we'll say, look, you got your warning. It was March 2024. It was sitting, a little bit of April 2024. It's a warning. It's a warning when it goes from $2,004 on Valentine's Day to $2,400, topped out at $2,400. It's saying, look, it's not saying that, okay, we're going to pull back, it's going to go down. It's saying, look, this is how quickly it can move. Gold is usually slow and it's boring for a lot of people that want to use gold as investment. But when you're saving gold as a hedge against fiat currencies can go bad really fast, which means then gold can go up really fast. So you got your warning, and if you're going to sit back and just watch it, wait, I'll buy some before the election or after the election. I'm going to see what's going to happen in the world. I'm going to enjoy my summer. Well, you might come out of summer and suddenly you're looking at 2,700 gold, right, Joe?
Yeah, and here's the thing. Look how comfortable. I remember, gold breaking 2,000. Man, it took forever. Didn't it? Felt like forever. And get there, sell off. have a day or two above it, sell off. Gold's not selling off. They can't even get it to stay below $2,300. They can't. They're trying. Listen, the ETFs, right? They're barely buying it. As a matter of fact, here in the U.S., they're still selling paper gold here. Wait. What do you think is going to happen when Wall Street falls 10%, 15%, 20%? They're going to run to that paper gold ETFs like they always do. And that's the part where all of a sudden, like Bank of America said on silver, hey, silver's going to be $35. Average $35. So that means probably going to spend a lot of 2026 above $35. But then they said, oh, by the way, that only is accurate as long as they're not buying the ETF and Silver Eagle demand doesn't take off in the United States, because in that case, forget about 35, right? Might as well just start talking about all-time record highs, right? That's the thing, Jason, right now. This is the perfect opportunity. And why do we, and people, listen, this is like, down near gold bar pricing, right? When you're talking about, $120 over spot, that's nothing. That's absolutely nothing, and it's a great opportunity. And if you have the means, I don't know that waiting gets you anything other than a higher price. But the worst part is I can't imagine the premium staying this low, right? I mean, normally right now, let's not kid ourselves. We should be talking about a $20 gold piece at, I don't know, $25.50, $25.95, $2,600. That would be normal. This is way below normal premiums. It's a great time. 800-951-0592. Jason and I will be back after the break. 800-951-0592. Joe and Jason wrapping up. Wrapping it up. God, the show went by so fast. Wrapping it up today. $20 gold pieces. You can pick them. Liberties or Saints, $2,450. Gold right now, $2,330 as retail sales came in. Not only was it under expectation, the bigger problem was they really thought we're going to have a bounce back because April wasn't very good, and instead what happened was April got revised even lower. And of course, the 1/10 in May, Jason, I think this at least opens the door for, 2 rate cuts this year. Thursday now becomes important. So tomorrow the markets are going to be closed. We'll still be here. The gold markets will be open overseas, but here in America will be closed. But now it's going to put some emphasis on that jobs report on Thursday. If we get another number in the 240s, heaven forbid, in the 250s, then I think you're going to see more momentum in the gold and silver markets, anticipating that it's going to give the Fed cover if they decide they want to cut rates, because it looks like at least, the consumer is 70% of GDP. So with this control group saying that consumer spending's down 1/10 in the first 2 months of the second quarter, we're probably not going to get some huge GDP number. And normally the second and third quarters, those are your 2 best quarters for GDP historically, Jason.
Yeah, I agree for sure. That if you see the jobs numbers go up on Thursday, that a lot of these numbers that they give for us to look at is pushing more towards now a rate cut. So I think that's on the it's on the menu for this year. The pre-33 gold, Joe. I got spare time. I'll look at some other gold shows and look at other gold, so-called experts. But I've seen a little swell in the last couple of weeks of guys that aren't huge proponents of pre-33 gold. They're suddenly saying, "Oh, you know what? I'm liking this now. I'm liking pre-33 gold. Look at the low premiums on this stuff." And so I know that we have customers that don't just buy from us, and a lot of the customers that do just buy from us, they love the pre-33 Gold. They trust our guidance. But it's looking like it ain't just us now, Joe. It's there's a lot of attention being paid to pre-33 Gold with these low premiums, and so it's time to dive in.
Well, that's the thing too, right? When we know when the markets get crazy, COVID probably was the latest example, right? Pre-33 Gold, I mean, we were buying back way over spot back then, and you don't get that when you're talking about the bullion and the bars and all that other stuff. On top of, and of course, for me, that's not why I like it. You know, I like it because of the privacy aspects of it all. I just think it's going to be in the long term. The best place to be is going to be as private as you can possibly be, because I don't know how much longer privacy is going to exist in the world with digital currencies and, you know, this whole thing with NVIDIA, Apple. You know, we didn't even get to. I'll do it tomorrow because the markets will be closed. 5 stocks making up 60% of all the gains, and it all has to do with us not having privacy. We'll talk about that tomorrow. 800-951-0592.